Okay guys, Crypto Sniper here. That Crypto Sniper, that's right, at YouTube and Gmail and everything else, in fact. Let me see if I can walk about and talk about having a Saturday night out. Let me just see if I can go outside in the streets here, holding the door. So what am I telling you? I'm telling you that the macro is dominating and that crypto is not going to make it. The crypto is in trouble. I'm here to tell you that the macro we warned you about is superimposing its will on crypto. And I'm also here to tell you that Bitcoin, we were wanting to be weak on Bitcoin, and you had a small squeezy that actually broke up when we thought it would be down. We were incorrect on that point. And then it didn't continue to its target, and we reverted back to weak in our community. I shared on Twitter that we were short Bitcoin and two other alts a week or so later after the events where it popped up and then fizzled back down, on the basis that it's been in essentially a trend change channel. Not a trend change, a flagging channel. And as a result of that, it's been very, very bearish. 1 second here, let me see if I can open this door because this echoing is driving me nuts. Yeah, it seems not. So no opening, no escaping. We're going to have to deal with the acoustics here. Let me just see if I can go somewhere else. So, yeah, let's see where it's here. So Maker is number one that we've been short. Community finds. We did share it once a while ago. We haven't reiterated in a long time. I've not been doing much on crypto. We're doing really well on the USD JPY. All the macros. FX has become the new crypto. But what's actually happening is the guys that are telling you on the Market Sniper channel, not on our Market Sniper channel, but on traditional markets, that the equities by the dip is going to squirt up 40% before it breaks down, are all incorrect in our view. In actual fact, what's actually happening is that you are finding that the NASDAQ is in a head and shoulders, the S&P is in a head and shoulders, tech is going down, 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 particularly growth is going down, 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 particularly. And as a result, that's leaning on crypto in a risk-off environment. And people don't realize, no, but Bitcoin's not tech. People don't realize that the debt market failure is causing a bunch of issues in terms of. Nice to meet you guys. Awesome seeing you. In fact, I'm going to come outside. It's a bit sweaty. I'm sorry. I'm just doing a quick update for the markets. Let's just stick our head out here and see. Hopefully, I'll get back in again. That's better. Have a look at our reset destinations here in beautiful Panama. Whoop, whoop, whoop. Lose the bald man. There you go. Anyway, so what are we talking about? Well, we're talking about the Maker as an alt that has an actual inverted HVF that we were in. That was one I let slip once, and we've not updated on, but that we're short. I mentioned when I told you that I was Bitcoin short, I was also short two other alts. The second alt is Tezos. I'm short Tezos. The third alt that some of the community members may be short is Elrond. That is EGLD. EGLD. These are the three that we have chosen because they're actually in what we describe as inverted HVF structures. However, the entire crypto strategy, let me say that again, it's not strategy, the entire crypto asset category is in trouble. And it's in trouble because you've just finished on Friday with these NASDAQ head and shoulders all triggering a major risk-off environment. There's a real problem. The stress of what the Federal Reserve is about to do. Look at that. Oh, is that a French? It's actually Panamanian colors, blue, white, and red. I think it's not French. The overall tech markets are collapsing. And by the way, the SPY will as well. So I have SPY puts. This is bigger than most crypto people realize. What you're actually getting is you're having the quite, not so early, but fairly late stages of reset taking place. The debt markets are dropping. The yield has been climbing. It is game over for the debt. Oh, look at the TG pink. So what that means is, in essence, risk off, cash is king, and most cryptos will have a hit. Now, I pointed out a hex double bottom where you got a little bit of a rally for the hexagons as well, but that's fizzled back down to the neckline almost at 16. So in spite of the pulse chain split, it might be the only one that performs somewhat positively over this period. But be warned, post pulse chain, E hex, that's the hex that's on Ethereum, may well fall by more than half, making up for meaning that your E hex and now your new P hex, when you add them together, you may not actually make new alpha on account of the overall market conditions. The overall market conditions are garbage. And why are they garbage? It's macro risk off. There is a debt system failure. You're talking about the USD JPY. These are things you aren't watching and you don't think about because you're not into currencies. It sucks. It's, you know, it's Generation X guys' points of interest, like me. Well, I'm afraid to say you had a 7 sigma move on there, and that's the beginning of the differential between what is planned on the US side in terms of rates. Let's get the lady and her dog in. Hello, hello, hello. How are you doing, little whiskers? And we're going to have a point out that 7 sigma event on the USD JPY is a structural failure of the FX markets. It's a release valve indicating the structural failure of debt. To fix my phraseology, it is the FX release valve slipping, and I've warned that the USD Korean won will go the same way. In time, there's going to be an Asian loss of value on top of FX emergings. You've already had the try and the ruble. In fact, the ruble I think will get stronger after this whole event, but it'll first go weak. This is dollar dominance. Guys, we're in a dollar dominant state, and all the guys that wants the dollars to die. Yes, in time, my friend, but the problem is the entire system, wholesale markets are based on dollar. I'm sitting in a country that is some way away from America. It's based on the dollar. If you want to trade certain things, people understand and know the dollar. You do not flick a switch and everyone goes, oh cool, I'll have that communist Chinese currency, the yuan instead. It's not going to happen. And by the way, that's not to say that the US hasn't pivoted extremely communist and the rule of law is entirely fizzling away in terms of what they did to Russia's money and freezing it. But old habits sustain. You do not pivot an entire system on a single day. Hello, Gigi. Don't look so scared. No. Look at the cat. He's a good kitty. Say hello to the Panamanian cat. She doesn't dig this. This bald dude's too aggressive. Anyway, so Maker and Tezos are going to go down, but generally crypto is going to come under great strain. The only one I wouldn't short is Hex. A, for liquidity reasons. B, because of the likelihood of hexagons pushing it up. It might do marginally better for a spell, but post snapshot, if it comes around about mid-May, you're going to end up with an issue. Because once it's done and everybody's had their snapshot, guess what? It's kind of like you buy a token for an airdrop, and guess what happens to the price after the airdrops happen? Well, this is going to be the biggest airdrop ever done. Anyway, I don't want to talk too much about a token that divides so many people, so I'm going to leave it right there. Maker, short. Tezos, we are short. And Bitcoin, I have been in and out of short, and I will probably put a little bit back on at some point, but I'm quite happy with my alts. They're going to overperform. And generally, Bitcoin is showing Bitcoin dominance on a falling wedge. And as a result, I'm very, very cautious, because eventually when we get to the bottom, the first one to turn, and might turn hardest, will be Bitcoin. Don't forget, if we have a South Korean crisis and a yen crisis, you have a lot of tech-savvy people that might say we don't want too much of the dollar. The dollar's got kind of strong, but we might pivot straight into Bitcoin. Isn't this architecture great? Welcome to Casco Vieja, Panama. Buenos dias. In fact, buenas noches. Yeah, so there you go. You've got about 90% of my Spanish right there that I've got so far. But anyway, I'll try to do better. So, why is this happening? Tech is down, risk off, debt failure is occurring, Major release valves are blowing out the steam. The pressure's got too big in the system, and that's showing in the currency markets. Wow, Amazon, the growth stock, Amazon. Wow, did you see that? Lost 3.5 billion. Massive gap down. Nasdaq head and shoulder down. ARK, Cathy Wood. Oh dear, a created hero, much like elongated muskiness, is going to go down. Long run, she'll be probably right. We're going to go exponential, and we're going to have chips in our brains. We're going to be controlled stooges. AI is going to tell you how to feel on any given day. Big Pharma is going to make you feel high as a kite while they strip you of all your assets. No doubt, no doubt, no doubt. But in between them implementing all of this, they've first got to break the back of the old horse while they are moving the heavy saddlebags from the old horse onto the fresh young horse. Somebody won't shut up. He really wants to be on YouTube. Anyway, so that's the big news. Our bearishness, I'm afraid, never really fully went away, despite that little push up. There was a rest in the dollar, and that's why we got the bump up. Dollar dominance is horrible for Bitcoin during a reset period where the major FX markets are going in turmoil. Unfortunately, the bulk of what goes on in the world is still settled in a fiat realm, and these things are at points of failure. Debt is dying, and as a result, the fear comes first. The breaking of the old system, the problem, reaction, solution, all of these key elements have to occur, and then you will go again. Bitcoin, some guys will be asking how far down. The truth is we don't have an inverted HVF for Bitcoin for downside. You have a flag, a bear flag. We do also have a head and shoulders that was coming from the 69k high. That head and shoulders, were it to perform, that is not me making an absolute call. There are no guarantees, but were it to perform, points to 15k. So you could put a nose through the 15k low level. That would be pretty harsh, and that's going to be on a horrible, horrible Nasdaq and tech. There's going to be a bit of inverse wealth effect, I'm afraid, in the markets, both on equity front, particularly tech stocks, and on the crypto side. So with all this happening, what is a man to do? Well, we're short. We hope to make money out of this. People hate us for that. How can you do that? You're taking money out of my pocket and putting it into yours. No, we're recognizing the economic state of the nation. We are not determined. We are determined not to take a bath. So we are in stables. And on top of that, if something's going to go down, we may as well ride it down. And the probabilities are, despite me and in my entire community, we won't make something happen that isn't already going to happen. On those tokens that I gave you, we have actual targets generated by the geometry of our inverted HVFs that give us clear exit points. But there can be scope for overperformance, spiller, thriller, all the way from Manila on this side of the Panama world, some way from Manila, it has to be said, but nonetheless. So that is why we will do what we do, and we may be one of the few people making green in what generally people don't make money. Retail guys do not make money in falling markets. In fact, even in institutional and professional trading markets, generally people don't make money on markets. Robin Hooders don't make money on selling markets. They all call buyers. This is going to be a shit time for most people. Sorry, it's bad news. I'm not a doom and gloom misery porn guy. I'm just telling you what I'm seeing, and it ain't going to be good. It ain't going to be good. You should be dollar dominance on the FX markets, and you should be accepting the fact that Bitcoin is going to drop before it goes up. What about DeFi? What about Bitcoin versus Nasdaq? Well, it's going to become interesting now, because actually Bitcoin held up a bit better than the Nasdaq. It had a small amount of green creepage, but it trades on the weekend and the equities do not. So how will Monday open? Let me tell you, Monday's meant to be a good day. There's a lot of weekly jobbers that do a stint where they go long in the beginning of the week, their best and strongest, and then they get defensive on Friday in case of downside shocks, particularly in an environment like that. Holding risk over weekends is not going to be popular in the institutions. Oh, nice and warm in here, sweating out of their head with all the thrills and spills. Anyway, so what's typically going to happen is if you open black or on Monday, it's going to be a bit of support for the market. But if it's a blood red bath on Monday, that is what happened on 1987, the beginning of my trading career. You open a Monday deep in the red, you're in deep shit, because people get defensive on Fridays. Okay, there's weekenders and there's weekly jobbers. They don't want to overnight the better part of 3 or 4 days. But let me tell you, by the time you're opening on a Monday, which is usually people that are holding over for weekly portfolios, and you open red there, it's never a good sign generally. And if you go and look on the market snipers tweets, you will see the NASDAQ, the US 30, that's the Dow, and the S&P, all called head and shoulders. We did on the Market Sniper channel, we debunked and refuted a guy who came out called Hunter, no relation, I assure you, I'm Hunt, claiming that the market's going to melt up by 40%. We came and said, you're too late, you've already had your melt up. This is volatility. This is high yield debt, virtually ready to spill at key triggering levels again. You ain't getting a melt up on the unraveling of the debt market and on this cranky volatility. That is not the basis for the manner of which things move up. Volatility is thrashing, not just up and down. If you're going consistently up in a straight line, actually the volatility is quite low. When you're going up and down wildly and the market can't agree at levels, and there's quite a broad range and it's schizophrenic, that is volatility. That's when your VIX measures go up. And the bond VIX measures, as we've been highlighting, are right. It's a bigger market than equities, and they have been indicating for a sustained period that there is debt stress. And the equity market chose to ignore it, and then suddenly stopped ignoring it. Let's get this fine one in there for you all. A little bit of, yeah, how's your auntie? Anyway, so with that happening, the bond market, VIX suddenly being big, huge gap, incredibility gap between the bond and the equity markets. Now the equity markets are suddenly, oh, there's shit in the land. Okay, best we start paying attention. And you've got to have an absolute spiller, a thriller from Manila all the way. You've got to have some proper capitulation. You need pain, you need blood in the streets. And this is all going on in the traditional markets. What kind of environment do you think that's going to be for your crypto? You should be defensive. We've been not buying, we've been not believing. That tiny little squeeze that was quite scraggy wanted to turn down, and the only reason for me that we were wrong on that one, that it squeezed slightly higher, never made any upside targets at all. It fizzled quite shortly afterwards, in fact, when we said, okay, look, we were wrong on that element, was that the Fed came out and did 1/4 point of interest rate. So let's be clear, you're 8% behind, you're on 0.25, and the inflation is at 8%. Okay, you're 7.75% behind, and you come in and you do a 1/4 point. Merry fucking Christmas. You're really running after her there, boy. You're going to catch that gal in no time at all with that amount of roses and flowers. That is the most half-assed non-attempt to make any form of real effort towards capturing this. So, truth be told, guys, that was what gave Bitcoin a bump, because guess what? The dollar rested. They said, oh, really? Is that all you're going to do? I thought you were going to do some serious rate rises. I mean, you are behind the curve like never before. So interest rate differentials is now driving the collapse in the different FX markets, and you're having an unwind. There's going to be derivative stress. There's going to be all forms of stress. Have cash on you. Have cash in the bank. Cash in the bank, in spite of the inflation rate, has been one of the best investments right now. USDC, stable coins are one of your best investments right now because of everything deflating down in what is a capitulative environment. So you should be defensive in crypto. That means you should be in stable coins, and those of you that are like us, that have real strategy and method, that have real stops that are tight, can have downside projections on the three alts that I've already mentioned that have given. There may be others, and others will all spill, but the difference is you don't have tight squeeze with a real stop, an entry point, which we took some time ago. Please understand, I'm telling you 3 alts. We were already short these a long time ago. You're not in the community. You don't get to get them when we get to talk about them. This is an update in retrospect. They have already triggered. The risk rewards are no longer the same. However, in spite of all of that, they have a long way to go down, and there's going to be more downside coming from them. Watch this Monday. It could be brutal because the crypto markets are looking deeply risk off. And guess what? There's a lot of institutional money that is feeling nervous about what's going on in this current financial environment, and they're feeling nervous about how the Monday market is going to open on the traditional markets. So we'll see you on the other side of this. Thanks for watching. Crypto Sniper is alive and well and has been short for an extended period, and those are our 3 shorts. This is not financial advice. Go to themarketsniper.com if you want to get these trades earlier. Register for a call. It costs absolutely nothing to find out what we're about, and we'll be updating you later. All the best for now, and let's see how far it goes. Exciting times. Bye for now.